Hello everyone, welcome to another online series by Singapore Computer Society Blockchain Special Interest Group. Second video features Mr. Matthew, Blockchain Innovation Team Member at DBS Bank and President of SCS Youth Council, who speak to you today on digital currency and its potential.
Okay, thanks everyone for joining my presentation on the evolution of digital currencies. My name is Matthew, and before we begin, a quick note. The content that you will be seeing throughout this presentation is based on my own opinion, and this is opinion that I have gathered throughout the years of working on blockchain and cryptocurrency related projects. So to begin, what we're looking at is a changing landscape of digital currencies. We're seeing the release of, from, the first few cryptocurrencies like Bitcoin and Ethereum, a now more and more expanded network and growing list of different kinds of cryptocurrencies out there. You see many different projects and many different styles of currencies, if you were to put it, and this list just goes on and on. Now this may get very hectic in today's world, and with over thousands of cryptocurrencies out there, it can get really hard to track. That being said, we can very clearly see that there are waves of cryptocurrencies that are really spawning out of that first few um, pioneer batch of cryptocurrencies, and a lot of these we're not familiar with. So the real question is, how do we make sense of all of this, and what does it really mean to us? Now, I'm sure this part is where people are going to be more familiar with. If you're not, then let's begin sharing about the topic of stable coins. Now, if we're looking at stable coins, some may identify one of the biggest one being Tether or USDT as being a one-to-one valuation of digital currency to the US dollar, or what in the finance industry we call fiat. Now, this Tether coin is essentially in the stablecoin category, and there are many other examples out there. For example, XSGD. The list goes on, and you will be able to find out more details about this online. So I won't go too much into that. But what is interesting to note is that if you look at this graph, we're looking at the value of Tether actually fluctuating between certain levels, right? Positive and negative compared to USD1. And that raises many questions. If this is really supposed to be a currency that is pegged to the USD, why does it even fluctuate in the first place? So in this simple example, we can actually tell that the business model of stable coins may not be as simple as it seems. Now, stable coins are essentially issued through a company. That company can be any company that decides to run crypto. It could be you or me or someone else who just suddenly decides and has a great idea and has some influence in the network to create a new form of currency. Now, as with all other businesses, you need to take note that this company operates in the sole discretion of its manager or director. And because of that, there are a lot of risks involved. And these risks, um, you know, for one example, can be clearly seen in the graph below, where the valuation of that currency may not be exactly what they promised. So this is on one end of the spectrum, where stablecoins aren't really as stable as they should be. But in general, it's still heavily used because, simply put, these kinds of stablecoins are used in conjunction with trading crypto. This is an easy point for you to gain access to trade US based cryptocurrencies. So if you want to buy Bitcoin, if you want to buy Ethereum, more likely than not, they're going to be pegged based on the exchange rate between um, that crypto and the USD pair. So USDT and other stable coins actually have some value within the crypto trading market, and that is its primary use. Now, we have this stable coin. The next thing we want to really look at is the other spectrum, where not just one company, but it's a consortium. Now, in a consortium, it can be uh, association of two or more companies or organizations with the objective of participating in a common activity or pooling their resources to achieve a common goal. Now, this can be bank, it can be non-bank. Within the Libra network, for example, there are several financial institutions, but there are also several retail company brands. So that kind of company really differs and varies um, from consortium to consortium. Now, within a consortium, how it operates is that the technology and policy governance is really decided as a group. And there are several benefits to this because no one single party, as compared to the earlier example, has power over every single decision. And you'd expect, the valuation and the operational model to be a lot more fair to the customer. Um, and let's hope this is the case because Libra obviously hasn't been released yet, and we're only learning more and more as the days go by. Now, what are the benefits of something like Libra? We're looking at something more akin to cross-border payments, and also having the banked and unbanked be able to access digital currency to make transactions on their own. So what do I mean by that? um, you can look at the idea of having someone in a third world country who doesn't even have a bank account, simply just has cash. They are somehow able to convert that cash into Libra via one of the Libra dealers, and suddenly they have access to a global network of brands where they can make purchases um, and meet the needs of their demands without having to go through a bank. So that is a very, very interesting concept. So this is something that you can explore more a little bit on your time. But without further ado, we need to go on to the next example. Now, from consortium, we need to grow bigger and bigger. And what's the next idea? Even the banks want to get into this. So one of the example is JP Morgan. JP Morgan has actually created their own coin, a JPM coin. And essentially that is being used to facilitate payments within that banking network. So if you are some form of institutional client within JP Morgan, you could use this JPM coin to make your transactions more efficient and a lot less hassle than dealing with normal electronic money that has to go through the current banking systems of today. Um, we've gone from the retail single company um, giving out digital coins or cryptocurrencies, moving on to consortiums who are fairer, and then moving on to commercial banks who now are regulated and are more likely to be expected to give you a fair operation of a coin in within the network. But we can go even bigger than that. What about central bank digital currencies, CBDCs, and retail ones in that fact? One example very clearly is DCEP, Digital Currency Electronic Payment, or otherwise known as ERMB, by China, very clearly. China has been at the forefront of creating digital currencies ever since their ban on trading of ICOs back in 2017. Now, China is really leading the way in having the government have a very, very vested interest in creating value out of, you know, blockchains or cryptos. Um, and ERMB is a very clear example. So what really is ERMB? ERMB is really the digital form of their current RMB cash. And the aim for this project is to really enable people to transact very similarly to how they utilize cash today. Now, within China, it's well known that their electronic payment network is very advanced. So why do they need to move on to things such as central bank digital currencies? Well, for one example, utilizing their own proprietary blockchain technology would allow them to create a model where you can have an offline wallet. As much as cash can be used offline, the apps within our phones as today can't really be used offline as such. Most of the applications within our phones require us to be online 24/7. If not, they just wouldn't work. So CBDCs, especially in the case for China, allows for these kinds of facts. And without sharing much further information, basically that e-wallet or ERMB wallet only needs to sync when you're back online. And without that, it would just function normally as per a physical wallet. So what are the benefits to the government? Because it has already, China already has a well-established network of e-currency. Um, traceability. Traceability is a very big thing for the Chinese government, and being able to keep track of the transactions that go in and out of these digital wallets can be hugely beneficial to how the government wants to operate. And this is a very exciting time in which we're looking at the possible future of every single country having their own form of digital currency offered by the central bank, essentially the government. So we're looking at from all the way of a small scale single company to consortiums to banks, all the way up to the government level looking at digital currencies. So the question is, why is it relevant to me today? And simply put, even within the local countries, we're looking at more and more adoption by government agencies on the use, transaction, trade, and facilitation of digital currencies or cryptocurrencies within the market. And Singapore is definitely not lagging behind. As announced last year, the Payment Services Act really enables the regulation of payment systems and payment service providers in that fact to be able to trade and transact with crypto under the watchful gaze of MES to make sure no wrongdoing goes on within the market. And this has sparked a lot of excitement within the finance industry. And really, for the first time, this is going to be one of the first few countries to really fully regulate and legitimize the use of cryptocurrencies and payment services. So this is really an exciting time. And that really ends my presentation. I hope you enjoyed it, and feel free to hit me up if you have more questions. Thank you.